Hi everyone, welcome to another honeystocks.com weekend analysis, and this one's going to be going out on the 17th of July 2021. Now, what I'm going to do before I switch over to my charting feed and show you and walk through a lot of the charts, I think it's very important, especially when we have a potential scenario starting to play out, that individuals like myself, professional analysts that provide research to retail and professional investors all over the world, I think it's very important to communicate when the going gets a little bit tough. I think what I do observe, especially with a lot of social media feeds, is there's a lot of analysts that kind of go missing a little bit and are not willing to kind of go out there and provide a logical analysis to the world. So I'm just going to provide the analysis that I've literally just provided my client base. I've finished recording the weekend analysis around 20 minutes ago, and I made a decision to just follow that up and communicate the exact same analysis to social media as well, because I think there's probably a lot of learning to be had. I think there's many of you that follow me on social media, maybe don't have the understanding of what's going on with the major averages, why is one sector breaking down where other sectors are kind of holding up a little bit. Why is it that big tech and Apple and Amazon are holding up, but under the surface it's absolutely brutal at the moment. So I'm just going to walk through the charts and hopefully you get something from it. And if you do get value from it, as always, please do like it, share it, subscribe, all the good stuff, and feel free to go and check out our website. But let's dive into the charts and let's see what the market's telling us. Hi everyone, hope everyone is looking forward to the weekend after the week we've had in the market. I don't see the point in trying to sugarcoat anything. It was a pretty nasty week. I think with oil and gas, we got massacred. We've got the solar, the clean energy names, a lot of the small caps just got annihilated. And not a great look for the market. That said, I do hope everybody was able to preserve whatever profits and protect capital, etc. The market has hit the level that I've been talking about for the last couple of months, and lo and behold, the market sells off. It's not a surprise. But it's what we've obviously been dealt with. So what I'm going to do with this week is I'm just going to walk through the broader market. I don't see the point in providing charts, bullish charts, because I'm 50-50 on where the market goes from here, and hopefully the charts make sense. I think with the S&P 500, it has been quite some time since we've tested the 50-day simple moving average. So we'll see how that one develops. The S&P 500, of course, hitting resistance levels. Now, what I essentially do, and those of you that have been with me over the years all know that I'm looking for a very particular set of circumstances with individual charts when I'm talking about the indices. Now, one of the things that I look for is the humble failed breakout. It's usually the early warning signal for me to start thinking about capital preservation, etc. It doesn't predict crashes, it doesn't predict corrections, but it just tells me, Sam, there's something going on under the surface here. We can see that the small caps have been annihilated. Many of these names are down 50, 60, 70%. And for me, that this looks to be a support level for the stock. And I think if we break below this level here, then that's a major headache for me. And when we kind of start to put the pieces of the jigsaw together and we see that technology is pulling back from being in an overbought condition, the thesis that I've had perhaps over the last couple of weeks, expecting the declines in the S&P 500 and of course a pullback in tech, has been, will we get that rotation into small caps or industrials, etc. The way the market has gone this week, I think there is a scenario that could come into play where we enter a corrective phase. Now, a corrective phase is something that we have to embrace. I think we, on average, get them once every 14, 15 months. And it's to be expected. Now, I'm not saying that we're going to enter a corrective phase. At the end of the day, tech has pulled back a few 2 days here. It's not the end of the world. It's still trading above its 20-day simple moving average. But when we look at, I guess, the resistance levels in the S&P 500, a potential breakdown in the Russell, and then you've got the potential for a pullback in tech. I think when you start to kind of put the pieces together, it doesn't create an environment where, in my opinion, you should be getting aggressively long. I think that would certainly be my view and my technical stance on the market. We can drill it down. We can see, I had this chart requested from a few of you during the week, and lo and behold, the support level in XLE has been broken. Now, of course, there's lots of opportunity on the horizon. It's just, well, where is that opportunity? When can we buy in on some of the individual names, for example? Or maybe you want to buy the ETFs. But I'm already starting to build in support levels for potential bottoms. I'm obviously looking for the bullish divergence. But at the moment, I think it's pretty much a risk-off environment for me. I think we've got the semiconductors. They've put in what looks to be a failed breakout. Again, I'm building in the support levels to see where we might potentially get some kind of rebound in these individual areas of the market. Again, consumer discretionary, textbook, just looks like a head fake there, not looking great. We've got iPay, which I know many of us have done very, very well on the likes of Square, PayPal, Visa, etc. Over the last couple of months. Upside objective has been met. Of course, we hope for a breakout. We definitely can still break out, but given that there's obviously been an alert went out for Square, and I think most of us have decent holdings in it, I think it makes sense now to start thinking about maybe not letting it, get the profits run away a little bit if we do start to see some big pullbacks in the market, because like I said, some of these tech names have barely budged from their highs. So I think next week, hopefully it's a different story next week. Hopefully by Wednesday when we have the halftime, hopefully everything is okay with the world again, and we're looking at buy positions in the market. But at the moment, I don't feel comfortable at the moment providing bullish charts because I don't really have much conviction. I did mention it in the halftime on Wednesday that with the scans that I run midweek, where I can return 100 or 200 names on any given week to kind of go through. The weekend, the midweek scan returned 15 for my main scan. So that probably tells a story in of itself. So that's where I am at the moment. I think we've got XME, metals and mining, looks like it's potentially ready to kind of break down as well. I know that the likes of Cleveland Cliffs, Freeport McMoran have been incredibly good over the last 6 months for many, but be aware that metals and mining, that there could be an issue. I have seen Cleveland Cliffs mentioned within the chat feed. So yeah, just please be aware of that chart. It's not looking too great at the moment, but like I said, hopefully there's a big rebound Monday, Tuesday, and all is fine with the world again. Leads on to updates now. Of course, Antero Resources has been massive for most of us. Today, it has now tested its 50-day simple moving average and the trailing stop loss. Now, what that means is on Monday, if the stock declines on Monday, I am out. The decision has been made for me by my technical analysis tools. I don't second guess it. I don't play the what if game. I will be out. So I just wanted to communicate that one. It's been running for what feels like forever. And yeah, congrats. It's going to be a big winner, but we'll see how that one goes on Monday, Tuesday. Again, very similar with Cloudflare. Breakout has done very well. It is pulling back to its trailing stop, and of course the $100 round number. But again, it's been chopping about sideways for the last couple of weeks now. That doesn't mean the trend can't continue to keep going higher, but I think it makes a lot of sense to just make sure that if there is a decline, make sure you're not giving up all that profit. And obviously Square Inc. Again, I've touched on this one. Hopefully the upside objective is still met, but at the end of the day, I think most of us have got in around 200, and it's been a decent winner. It's not going to win any awards at the moment, but at the end of the day, profit's profit, and I'm using obviously the trailing stop loss to make decisions for me. I've not been second guessing every little move in price. So again, we'll just see how that one goes next week, and hopefully upside objective is still met, but we'll see how the broader market goes. And of course we've got T-Mobile out there, which looks like it's potentially actionable. I don't know what to say about it really. I think with the market, if it's declining and T-Mobile's breaking out, do I buy T-Mobile? I don't know yet if I would. It's going to be a very subjective judgment call, and I think it will probably come down to your own individual risk tolerance, etc. The alert is clearly out there, and it looks to have closed above the Fibonacci level that I've been talking about. So we'll see how this one develops again next week. But like I said, I don't want to get into individual names this week. I trust it makes sense why, and let's see what happens next week. But please do enjoy your weekend. If anybody has any questions, thoughts or comments, as always, you can comment below this post and I'll get back to you, or you can send me a private message if you have any chart requests, etc., or if you have any positions that you need a chart on. I will be back Monday morning, and we'll see how it's looking. But please do enjoy your weekend, and I'll pick up with you all very soon. Thanks as always.